Hi, welcome to the Market Alert for Thursday, the 29th of April 2021. So dollar dumps to 2-month lows, Ether record high after Powell promises more and warns of froth. This is not a time yet to think about tapering. Well, what a surprise. What a surprise. Watch Fed Chair Powell trying to explain how the Fed knows inflation will be transitory. Good luck with that one. You want to see the price of lumber. It continues to make new highs. The Fed is trying to paint the picture of control, but Gundlach tries to make clear they're guessing. Yeah, of course they're guessing. They've been guessing for years, otherwise we wouldn't be in the mess we're in now. Stocks were slammed as Powell drops the F word, and that F word is froth, i.e. the stock market's in a bubble and it's overvalued, but don't worry, we will continue to support it with the Fed put. JP Morgan after Powell buy every dip. The Fed's announcement today is market positive. We will still receive 120 billion a month in QE with historically low rates. US earnings continue to improve and we are still several weeks away from a full reopening. As I said many times in the alert, you can expect all of this bullishness to continue until the economy is fully reopened. One benefit, if you can call it a benefit, where everything was locked down, it's given the Fed and all of the economic data the opportunity to go from being shaken out to figures that were never seen before to now using those figures to support the market and bring it back, which is why we're starting to see the inflation along with the stimmy checks that have provided record highs in consumer spending as well. So dollar dives after dovish Fed statements, bonds shrug, short end is hawkishly pricing in a 90+% chance of a rate hike by the end of 2022. So nothing to worry about there then, is there? So no rate hikes until potentially the end of 2022. Goldman goes all in commodities, sees biggest jump in oil demand ever over the next 6 months. I won't read the rest of that, but as again, it's not rocket science. You have to look at the fundamentals behind all of this. And this is very interesting as well. This is from a video I watched yesterday about $50 silver. And this is the first time we've seen since 2011 here that physical demand for silver is actually greater than industrial demand. So very interesting there. Putting pressure on the silver market. We see the price is moving higher yesterday, but that was down to the Fed still remaining dovish as far as rates are concerned. Meanwhile, the implied volatility, despite the market selling off late on, you can see 1494 down to 1456, and the Dow is currently up overnight, which we'll look at in just a moment. The yields are 1.614. Doesn't seem to be any data there for some unknown reason. Let's just have a quick look, see if there is any. There we go. So over the 5-day, you can see yesterday with the Fed speaking, we managed to get back up to that 1.65 level. And today is Thursday. What news have we got? 2 a.m. Biden has already spoken, so that's out of the way. That's probably what brought the stock market back. Advanced GDP at 130, along with advanced GDP price index. Unemployment claims, the weekly one. And then we've got pending home sales when the Dow opens at 3 p.m. So speaking of the Dow, let's have a look, see where we are in the Dow. That's in the metals. I'll find it in a second. And we can see yesterday in the daily charts, I mean, we're still stuck in this sideways move for the Dow. However, we've had lower highs for the last 3 days. Looks like the overnight may change this and bring the market back now that Biden has spoken, Powell's out of the way, and there's no other really bad news around. We're down to the 20-bar moving average, and we can also see that we've got an increase in volume on the downside with less of a range than the previous day, which indicates there is buying pressure or demand coming into the market there. Overnight, you will see that prices have moved up nearly 100 points, coming off yesterday's close up to the R1 pivot level there. And now you can see as well, starting to move back up as well. In a bit of a sideways channel, we need to break through this in order to move higher. Similar picture in the DAX. Just pick up the daily chart there and get rid of these. And you can see that prices at this 62%. Touched this yesterday. We'll look at that in just a moment. When I mean a similar picture to the Dow, the DAX managed to recover and hold during the Powell announcement last night and the press conference, and this too following this morning, but not as up as much as the Dow by any means. So overnight, let's just have a quick look, see where we are. Market gap down overnight to the DP level below the 200 MA, managed to recover above both of these. You can see how they drove through both with an increase in volume to get through the resistance. Market went through, pulled back, and then moved higher. However, overnight we've weaved around the 200 MA, gone below, come back, gone below, and are currently just above it there. Really quiet. The futures market opens in 10 minutes time. But if we just compress the charts, have a look, see where we are, we can see we've got yesterday's high, which is around that 62% again. That we saw in the daily needs to be taken out. The high is quite a distance away at the moment, 15,513. It wouldn't take a lot to get there, but at the moment we've got to get through the 62 and the 78 if the market is to move higher. So that 346 level, here's the 350, so just below the high is where the 62% is in the daily chart, and this needs to be taken out if prices are to move higher. So we can reset this, and if I'm still recording when the futures open, we'll have a quick look at that as well. So over to the metals market, and again I'm surprised by what I saw again yesterday, particularly that we had the expiration of the May contract coming up. The open interest plummeted, and they managed to bring the market back up, which is just quite incredible. Maybe if they were to slam the price now, with it being so exposed to the wider audience and the increase in buying of physical metals now, this is starting to spread globally, then maybe it would be too obvious that their tricks are continuing. So that's the only thing I can think of. I mean, the market moved lower and then came back, and now even on the overnight it's heading back up for that 26.63. As I've always maintained, for me, we've got to get through this high over to the left here, which is just under $30. 27 would be useful to start with, of course, but to get through and get a trade through convincingly, the $30 per ounce level is very much required. It hasn't done this since 2013, and that was when it was moving from the high in 2011 down into 2013. So it was heading down when it hit the $30 the last time. The dollar down yesterday, as we can see. Didn't like what Powell had to say with regards to interest rates, that they're going to go negative. We know this anyway. So more weakness for the dollar with a bit of luck. That'll support the metals prices as well. See this in gold. Prices also moving higher for yesterday, recovering as well. You can see they're trading up to 78% of the small retracement there. And also 78% from a much bigger retracement as well, which was from this high down to this low and then projected back. So these are your areas of resistance for the gold market with regards to fib retracements there. So that's a roundup of everything that happened yesterday and what's likely to happen during today. A quick look at yesterday. I am busy with the software at the moment, so I'm not paying as much attention to what's going on. If I see a trade, I will do it. But I'm sort of distracted at the moment as I'm putting new features in the software. So yesterday the market in the futures managed to rally up there. You can see moving up 25 points thereabouts and heading towards the BRN. The market opened, sold through that, went to the high of Tuesday and then stopped. You can see the volume there, the battle going on, and eventually just having a look at the R1 before prices just traded sideways. And again, not too dissimilar to what we saw on Tuesday, have the shakeout and then prices trading sideways, coming back around 89% before then moving to the downside. You can see this here quite clearly. We've got a small retracement here to start with, and then we've got the bigger retracement there, and both of those are 89% retracements, and the market then moving sideways to lower, heading back down towards the close and the 200 MA before finding support and bouncing off this level. Like I say, there's a lot of new things coming in the software that highlights automatically all of the supply and demand in the market. It also shows you the momentum as well, and when it's running out. So a lot of exciting things coming in the software and make it a lot easier. I won't have to explain it, and you will see it immediately in the chart. So the afternoon, the market, sort of mid-morning had stayed around the previous day's high. That's Tuesday's high. Again, you can see we've got sort of a triple top there. The market then, of course, having to wait for Powell, so we had a bit of a sideways move, moving back up to the R1, and then the news. And as you can see, the 62% retracement from the daily chart. Prices then sideways after the news, then have a quick spike up, and that was it. That was the high, and again you can see that retracement coming in before prices start to move to the downside there. And then this is the crude oil inventories, and for whatever reason the market decided to go south. The other news, by the way, was Lagarde. She was speaking, so she must have promised to buy up all of the toxic debt again and print more money to send the market up to that 62% retracement. But that's where it stopped. And like I say, you then get an 78-89% retracement, and the market moving to the downside as well. Okay, that will do it for this one. Covered a lot and in a short space of time. So as ever, thanks for watching. See you in the next one.